Good afternoon, everyone. My name is Sherry Varrelman, and I'm a Senior Vice President with TD's Wealth Management Group, and I'm delighted to join you today for our discussion with our panel on building a relationship with your money. Thanks to everyone for joining us. We are joined today by a really wonderful panel of highly accomplished women, and I want to take an opportunity to introduce them all to you for this discussion today. If you'd like to learn more about the women who are participating as our panelists today, please go to the speaker section of the event webpage and you'll see all of the information on their backgrounds. So first, to introduce Marina Tranchina, who is a certified financial planner and a vice president with Fidelity Investments. She spent over a decade in the financial services industry, serving both as a financial consultant and now as a branch leader, heading up Fidelity's Red Bank, New Jersey office, leading 30 financial advisors in working with clients in everything from goal setting to investments to financial planning. By way of background, Marina earned her BS in Business Administration from the College of New Jersey. So Marina, welcome today. We're delighted to have you. Also delighted to introduce Darleen Gillespie, Senior Vice President and Regional Manager at Provident Bank, headquartered in Islip, New Jersey. Darleen has over 28 years of experience in banking and financial services industry. Darleen focuses on assisting clients and their businesses in providing goals-based advice to assist them in meeting their financial goals. Darleen holds a BS in Business Management from Ramapo College in New Jersey. She just completed recently the ABA Stoney Graduate School of Banking and is currently working on her MBA at the University of Massachusetts. So Darleen, welcome. We're so delighted to have you today. And our last panelist is Lori Roth. She's the global managing partner of Prager Metis International and also serves as the co-managing partner of Prager Metis' CPA group. She's been in the accounting industry for over 30 years and currently oversees the day-to-day operations for the firm, providing guidance and oversight to the managing partners and service line leaders. Lori holds a BS in business from Lehigh University. She's a member of the American Institute of Certified Public Accountants, the New Jersey Society of Certified Public Accountants, and also serves as a trustee on the board of the New Jersey Business and Industry Association. So ladies, welcome today to our panel. And now let's get the conversation going. So let's start with today's key topic around women and building a relationship with your money. Marina, let's start with you. So women traditionally are great savers. However, they often just sit in cash or they're underinvested over too long a period of time. And we know that that creates a challenge, especially given the fact that women statistically end up on their own due to death, disability, or divorce. So what would be your guidance for women who have done some savings, but they're unsure what to do next?
Yeah, thank you, Sherry. So first, I think if you fall into this group and you've been able to set aside some savings, congratulations on that first step, right? It's a huge first step. The next thing really to do is to figure out what portion of that savings should be kept aside in an emergency fund. Here at Fidelity, right, we recommend at least 3 to 6 months of savings that could be used to pay for any essential expenses if needed. After that, it's really important just to think about what have you saved this money for? Is it for retirement or maybe for college expenses or another goal like a home purchase or a luxury item? That goal matters, and you can certainly have several different goals. The goals will help you to dictate the time frame of some ideal investments. And it's probably most important to remember that if you have a mid to long range time horizon, your cash in a savings account is generally not working as efficiently as it can be for you if you're looking for growth. And so at that point, right, if you've established that you are looking for mid to long range growth, you can visit a site like fidelity.com or call a financial professional to get guidance on your potential investment options, given your goals and your risk tolerance. That financial professional will collaborate with you to educate you on the investment choices that might be available and discuss things that you should be aware of, like costs.
Mm-hmm. Such great points, Marina, especially the idea of saving and putting aside those funds for an emergency and to help balance the challenges that we face in life. Darleen, as a follow-up to Marina's comments, What advice do you give to women as they're trying to balance achieving financial independence while at the same time going through perhaps challenges in their life like death, disability, or divorce? What are your thoughts?
I think that's a great question. I do believe that we have to determine actually what does financial independence mean to you. So what it means to me may be something different for someone else. So with that being said, I really believe you have to do the work before an unexpected life change, such as a divorce or an unfortunate death of a spouse. Being involved in the financial decisions from day one is crucial. No longer can we afford to allow our spouses, who sometimes are the primary breadwinners in the family, to make those financial decisions independently. We should be involved in those decisions. It also means that we should have, as women, we should have credit cards in our own name. It means that we should have possibly our own bank account, not to keep funds separate, but just to have some sort of independence. I think it's important to understand your spouse's or partner's income and bills. I do think that speaking with a financial planner is very important as well. And having really good life insurance is a key part to ensuring that there is financial independence in the case of a life event. And lastly, I'll just mention that I think living within our means when or if a life change occurs helps to avoid a potential financial crisis. So, such as, how am I going to pay the mortgage, or how am I going to pay the car note? Being realistic and taking inventory of where you're at and where you want to end up are all important factors as well.
And so important to your point around women not only having a relationship with their money, but also having things in their own name, like accountants in their own name and credit established in their own name. So great points. Lori, from your vantage point and your experience, do you see a difference between the way women save and invest from the standpoint of your perspective versus men? Is there a difference between the two?
All right, that's an interesting question. I didn't realize I was muted. I think that there is a difference based on different circumstances, not more so than on different genders. The one key factor in the gender differences has to relate to life expectancy. So at this time in North America, men's life expectancy is age 76 versus women at 81. And even though we see that going up constantly, and it is dependent on certain other circumstances where you are even within North America, things having to do with having children, having a spouse, things like that will affect life expectancy. But just at its core, women's life expectancy is 5 years longer. When you throw in other factors of even including life expectancy, that women will have at least some period of time where they have to be financially independent, whether it's because they survive their spouse's death, or whether they get divorced, or maybe they were always alone. There will be a time period that women have to make sure that they're financially independent. I think that other than that, it really does have to do with life circumstances, because as we all know, it could happen at any point in time, and that people should have their own independent relationship with money and plan accordingly. But whether you're planning as a unit with a partner, a spouse, a child, a parent, or you're planning individually, I think it's less dictated by your gender than it is your circumstances and your situation. So I think all those things need to be included in any kind of budgeting or planning or saving or investing, really.
Yeah, the statistics are daunting. I mean, if you think about it, on average, women living 5 years longer than men, maybe there's not a gender differential in how they invest, but there's certainly a call to be taking that into consideration when you think about supporting yourself, given the fact that your life expectancy is 5 years longer.
Agreed. I think even in planning as a couple, it's important to recognize that, because women need to participate in those conversations. As I said, whether you're planning with a parent, with a child, with a spouse, with a partner, whatever it is, you need to consider that in whatever planning you're doing, even if you're not doing planning on your own.
True. Many women that I speak to who are perhaps not in the financial services industry, or women who are highly accomplished, when they think about the whole idea of putting together a plan, putting together a strategy, many feel overwhelmed and actually they don't know where to turn. Marina, when you face a situation like that, how do you advise women when they're saying, this seems overwhelming, where do I start? What are your thoughts?
Yeah, Sherry, I think this, both Darleen and Lori have touched a little bit on this, right? So first of all, if you're feeling that way, you're certainly not alone. And I think recommending, I'd recommend focusing in on some of the simple things, right? Your budget and cash flow first. So sitting down, creating a personal balance sheet to get organized. As Darleen and Lori were saying, this is especially important if somebody else in your household, whether it's a spouse or any other family member, normally does these types of things, right? If someone else in your household is the one paying the bills or paying attention to the bank accounts and expenses, starting with that organization and personal balance sheet, getting an understanding of, what income you have coming in, what are the expenses going out the door, and then what are the other assets and debts that you have, right, either individually or as, again, a planning unit or a family. This will all start to paint a picture of your current financial situation and allow you to see if you're in a position where there's a cash flow deficit, for example, and maybe now you're focusing more in on the budget, or if you're in a position to really start to ramp up your savings and investing. And if you fall into that second group and you're ready to ramp up your savings and investing and you've got that emergency fund set aside, a really next very easy and basic step would be just to ensure that you're taking full advantage of any employer-sponsored plans, especially those with a company match, and ensure you're invested appropriately, within that particular account.
Great points. There seems to be a proliferation of a lot of tools and tricks and tips and ways to help support you in kind of managing the finances. Darleen, you spoke to the importance of that managing of that cash flow earlier. What are some of the tools or methods that you have seen in the industry that help women organize their finances?
Sure, I think that is a very important point. I can speak to some of the things I see in the industry and even to my own personal experience. I think some of the tools and methods that help organize your finances individually, it actually revolves around technology. So taking advantage of your financial institution's online banking platform, and also the apps that you have accessible to you right on your phone. One of the things I do is I make sure I set up alerts. For example, if my balance falls below a certain dollar amount, I get an alert so I know, I need to pay closer attention, or maybe I need to transfer funds. I set up my monthly expenses on auto pay, so it kind of takes the worrying about a bill not being paid on time away, because I know it's going to happen automatically. I reconcile my statement. So, I know that sounds foreign for some people, but it's important because whether you believe it or not, banks make mistakes, creditors make mistakes, and it's important to pay attention to your statements so that you can pick up on those errors. And one important thing for me, as I mentioned, is utilizing the bill paying option, but also keeping the account I have to pay my bills separate from what I consider to be frivolous spending, so that I'm not tapping into the funds that I have allocated on a monthly basis for my expenses, for a night out on the town, or a night for a great dinner. So just kind of being organized, and as Marina mentioned, kind of having that spreadsheet set up and taking advantage of all the tools that are accessible to us and free that help us keep our finances organized.
Great. Well, the short-term cash management of your finances helps to grow the long-term strategy. Lori, when you think about the same idea of the short-term and long-term, how do you guide women or any client really in how they manage that, building a plan for both the short-term and the long-term?
Yeah, I think that's very, very important. In fact, another statistic that I found, which I found very interesting, is that although we think of men as being more the person who's involved with paying the bills and running the finances, there's actually 61% of women actively work on planning for their finances, while only 23.6% of men do. So it is an important task and an important thing to do. I think that planning falls into a lot of different buckets. And the way I like to work with women, with anybody, but specifically with women, is to really start with understanding a budget and understanding what their expenses are and understanding what their goals are that they can then build into their budget, even if savings is one of those goals in a budget, in an actual budget, along with things like vacations and entertainment and things like that. But I think it's important to compartmentalize your budget and have a section that's really just for housing, for example, and has everything related to your house in it. Even if that's saving for a new bedroom set or whatever it is, built physically into the budget related to the house. And then have a separate budget related to transportation, whether you're commuting on public transportation or have automobile expenses, or that you travel for business or for family obligations on a regular basis, but have a transportation section. And then have another section that's related to general living expenses, whether it's groceries, maintenance, savings, whether you're funding for your own or child's education, whether you're funding for vacations, whether you're funding for life events, whether it be a future wedding or communion, bar mitzvah, whatever it is that you're funding for, that you're looking forward to. And always to have a section related to retirement as well, to be funding for a lifestyle that you want to maintain then. And then when you have a really clear understanding and picture of your budget, detailed, everything from haircuts to clothing expenses to alcohol or entertaining, whatever those things are that fit into your life, to have them budgeted. And that way, even that exercise of doing that budget gives you a better relationship with money and with your finances if you understand all the components of it, rather than just one big blanket number that you think is what your goal is, or that you're just focused on how much you're bringing in. I think it's important to focus on what those goals are and what the budget is for the everyday things as well as the long-term things. That way you can really build the appropriate investment strategy. Even earning and evaluating your career and your position is easier if you know what those budgeted requirements are. I think it's important to recognize that you have to look at what you want versus what you need, and to really prioritize your budget based on those necessities and requirements, but also to give weight to those things that you want as well, and have that be a part of the goals and a part of the budget, because that's what's going to make it all work together.
Absolutely. It's really, it's not only foundational, but it's very illuminating for people to go through that disciplined review of their expenses, because there's often the aha saying, gee whiz, I didn't know I spent that much money on ... And you can eliminate the discretionaries, those that if you're looking to cut back, you can say, well, I really don't have to do this per se. So it's a very good discipline to go through, and great words of wisdom to share. Marina, I'm sure a lot of women who are listening today to this conference are thinking, okay, I've done some of this work. I think I've got a bit of a financial plan, but how do I know if I'm on the right track? And so what are your thoughts, and what are some things that you often see that women will overlook?
It's a great point, Sherry. So some of the most common things that I see overlooked, I'll fall on what I'll call the protection side of the house. So are you financially protected for some of the unforeseen circumstances beyond what that short-term emergency fund could help you to handle? So in practice, right, things like life and disability insurance on both you and any family partner or spouse. This is missed most often on the caregiver or parent that might be staying home to raise children. Some of the other things that we see missed quite a bit are estate planning basics. So, this starts with simple things like having a will in place, and an updated and accurate will, and then also ensuring that you have things like beneficiary designations in places like your retirement accounts or your life insurance contracts. And then to switch gears a little bit, some of the other things that I would mention that are overlooked are, building up, right? You're starting to save and you're starting to accumulate high levels of cash savings, and at the same time, you're holding on to high interest rate debt, right? Thinking that the cash savings is really doing you a good service, right? And maybe overlooking the fact that you're paying the higher interest rate on the debt side. And then the last thing I would touch on in sort of this overlooked category would just be the time value of investing, right? So, for example, right, for any parents of younger children that might be listening, starting to save for future expenses for your children, such as college, as early as you possibly can, to make the most of the time value and the compounding effect that can have on investments.
Great points. And it kind of ties a little bit back to, Lori, what you were saying earlier when you were talking about the importance of that budgeting aspect and really getting a handle around your expenses. Let me just pull on that thread a little bit more, Lori, and have you share with us how should some women go about the next step of setting those realistic financial goals? And are there any standard items to think about when you're thinking about building those longer term goals? What are your thoughts?
Yeah, I think that the budget process is one part of the plan, but I think evaluating that is an important thing as well. So, for example, your needs might change, or there might be a new thing to add to your budget, but you also have to be looking at it in conjunction with what's actually going on, right? So maybe you took a first stab at it and maybe you looked historically to see how much you were spending on lawn care or something like that, and then you see, oh, the cost of that has gone up a lot, or maybe conversely it's gone down. And to be adjusting those goals on the everyday side of things, but also to be adjusting them on the bigger, more long-term things. For example, let's just say somebody gets an increase or a bonus once a year, and to plan appropriately for what happens with that, whether, because you wouldn't want to leave that for the only savings that you were going to be doing in a year. You'd rather do that periodically throughout the year, and then use the bonus for either something extraordinary or to add to savings or whatever those bigger chunk things might be coming down the road. When we talk about automobile expenses, for example, you're putting in what it's costing you to run the car, whether it's for a car payment or a lease payment or motor vehicle registrations, gasoline, things like that, car insurance, but you're not necessarily putting in for, in another 5 years, maybe you're going to need a new car. And so to have those things set up for part of the budget, actually, to systematically be saving for those things so that when they occur, they're not as extraordinary. So I think that's an important piece, and I think always revisiting it. How are you doing towards your goals? Are you meeting them? Are you exceeding them? And then you can adjust your plan accordingly. Are you not meeting them? And, should we be looking at some other ways to help to meet those goals so that it's not always a struggle? So I think that there's things like that. I think that there's also things that people might routinely not include, like vacations, or let's see, what are some other ones I see that people forget to put in their gifts? That's a good one, right? So people don't always put in appropriately for gifts. And then you think about it, and it's an aha moment when you stop and think, okay, I have this many siblings, this many kids, this many parents, and we're giving gifts probably twice a year for a birthday and holiday season. And sometimes they're extraordinary because, It could be that we have to travel for the celebration or, something like that. And I think people are often surprised when we sit down and actually do a budget at how much they're not thinking about in terms of budgeting and not realizing that those are the kind of things that can trip people up.
Such great points, and especially the whole idea of it's not just about setting the goals, but it's also monitoring the goal and your achievement of those goals and making sure that you are on track. Great points. Darleen, you were giving us some really good insights around the whole idea of managing the cash flow and that kind of side of the balance sheet. But many women find themselves, unfortunately, getting into debt. So how do women make sure they cannot fall into that trap of getting themselves into too high a level of debt? What are your thoughts?
Another great point, and I think that Marina and Lori have both spoke very eloquently regarding setting up a budget. I think that is the first and foremost thing that someone can do to avoid digging themselves, as I would call, into a hole. And having a budget just kind of gives you a roadmap of where you are and where you want to get to, and what is the best way for me to get there without having to go into a lot of debt. I talked a little about not overspending, trying to live within your means or below your means. For example, you get I think Lori mentioned this, you get a bonus, an annual bonus for your job. That doesn't mean you go out and splurge. That means that you determine or budget, what part of that can I put in savings? What part of that can I use to pay down some debt? And just be smart about how you spend your money. I liked how Marina talked about some people get caught up in having a savings, but then they're paying this high interest debt, whether it be credit cards, loans, etc. I think you have to be mindful that it's important to try and pay down on your debt as much as possible. And, think about the interest rate you're getting on your money versus the interest rate you're paying out to creditors. So just keeping all that in mind is important. I do think it's important that you always have a liquid cushion. You have to put money aside because of emergencies. And that also helps to avoid having to pull out the credit card when there is an emergency if you have a liquid cushion that you could fall upon. So I think if you're mindful of your spending, if you have a good budget, and if you're not sure how to come up with a budget, you could always speak to a financial planner, your local banker, your CPA, and just to help get you on the right track.
So everyone's offered wonderful insights on the idea of building the budget and how that's really foundational. And Darleen, your comments reinforce that to the whole entire goal setting process. And Lori, you had just been talking about, reserving for the unknowns, and you mentioned maybe gifts and things like that. As you think about that, Lori, what are some of the unknowns? Is there a standard rule of thumb? Is it like 5% of someone's total income, or how do you identify? And if you can't identify all those unknowns, which is why they're called unknowns, is there a rule of thumb that you would recommend to women to set aside in the event of an unknown? What are your thoughts?
So I think Marina spoke to this a little bit at the beginning, and we do usually recommend about 3 months of monthly living expenses to be held in reserve for things like unknowns. And when we talk about unknowns, obviously there's lots of things that could happen. A storm could happen, or a trip and fall, something like a disability that isn't maybe a long-term disability, but supposing it's something that means that you can't, well, now we know we can work from home, but that you can't physically get to a place of work, or God forbid you have an injury and you require back surgery or something like that, that hopefully is a little blip in the scheme of things, but could put you out of work for a few months. I think it was Marina that spoke earlier about having the appropriate insurances in place also. That's really important to help safeguard against the unknowns, and those can be built into your budget as well, so that you have short-term disability. Some people are offered it through work or long-term disability, but those benefits won't kick in for a while. So it's important to have the liquid savings and to have the proper insurances in place to help to fund for things like a storm, flooding your basement. I mean, you don't think about things like that. Those are clearly unknowns, but if you're properly insured and proper planning in terms of savings, I think that one of the things that people don't think about as much as an unknown, but clearly is health situations that could come up at any point in time. And even if hopefully, God willing, they're temporary or something that can be dealt with quickly and easily, even those quick and easy times can put financial pressures and struggles on a person. So planning appropriately, providing the proper assurances and insurances in those situations can help an awful lot to take some pressure, financial pressure, off of a already pressure-filled situation. By the way, sometimes there's good unknowns. Sometimes somebody has a baby or chooses to get married, or there's some kind of a fun life event that occurs, a destination wedding that you want to go to with your family, somebody having a big birthday and choosing to include their family in a celebration or something like that. But those also have financial sides as well. And so it is something that, we think of as an unknown that can have a financial impact on people.
Mm-hmm. Great advice. So Marina, when someone has gone through, a woman has gone through the discipline of building the budget and thinking through the unknowns and really trying to plan that strategy out and is thinking about their goals, how do you and how does your team then sit down and advise a woman on how she takes that goal setting process and from there looks to build that strategic asset allocation that can help meet those medium and long-term goals? What are your thoughts around that process?
Yeah, so you made a great point there, Sherry, right, in that there's a ton of resources to help with this. Many of them are free when it comes to asset allocation, right? So allocation at its core is once you've identified, right, those goals, it's how you're going to distribute your money across different types of investments. And so in order to determine proper asset allocation, a team like mine will help folks to consider their goals in a couple different ways. And we've talked about some of these things before, right? So the first one is time frame, right? How much time do you have before you might need some of this money? The second is something we haven't talked a ton about yet, right? But how comfortable are you with risk, right? And with market fluctuation? And the third thing that we would help women or anyone to think about, right, is kind of wrapping back into some of the budgeting and things that we're talking about is how does your current financial situation look as we think about where we go forward with asset allocation from here. So I think an easy example, right, for many folks, right, they're focused on retirement savings, and depending on what that timeline looks like, let's say it's a longer time horizon, that could mean that you could take on some more risk, right? You have a longer time frame until you need to access that money. However, right, where a financial team would come into play is to get to know your situation a little bit better in terms of how comfortable you are with watching your savings sort of move with the volatility that we know exists in the market. And so those things together, really timeline overlaid with your risk tolerance and your comfort with investing, will help us to determine an asset allocation. And all that really means, right, in the end is that we spread your savings for that particular goal into some different buckets. And the buckets, generally, you're going to have some asset classes that have negative correlation, which just means when one goes up, the other is usually coming down. And stocks and bonds, I think, are the most familiar or common examples of something that would act in that, or usually acts in that inverse way. And again, any financial professional can help you, to take one of your goals and look at the savings that you have set aside for that goal, and help you to set a proper allocation mix, and even to come back to something Lori was talking about on the planning side that it applies to the allocation as well. The first step is obviously setting the proper allocation, but and any financial professional would also help you to figure out, well, how do I monitor this over time? How often do I need to review and potentially adjust?
Great points. So Marina, I've seen with a lot of women, once they establish their overall financial plan, investment plan, and really feel comfortable in that peace of mind that comes hand in hand with having that in place, they often want to then protect their children or educate their children on the importance of investing. And you know, young adults can't start soon enough. What have you seen as some strategies for how women can help to educate their children on the importance of all things financial related?
Yeah, this is something I'm really passionate about, Sherry. I think it's a big reason that I'm in the industry. I was educated at a pretty young age around a lot of the things that we're talking about, and you don't realize it at the time, but it instills different things in you that then I became really interested in from a career perspective. So I think there's a lot of potential upside here. Some of the easiest things, right? There is no lack of information available on any financial website. Different viewpoints and insights articles on how you could get children started. And so I'll just give some examples of those things. I think for younger children, a really easy place to start and something that we might overlook is just to make money tangible for them, right? So real money. They're all growing up in this very digital age, and they see their parents or guardians or family members swiping debit cards and credit cards, and I think at times we overlook that first step, which is just allowing young children to understand what money tangibly is, and then over time, right, doing you can make games out of it, right? Label food in your pantry with different costs and help your children to understand, hey, maybe you can only have one of these things. How would you prioritize? And then I think you can take that a step further and introduce them to a banking institution where that real tangible money becomes digital, and they can sort of see the cause and effect relationship in terms of how money gets into the digital platform. And then more specifically, right, maybe for parents or guardians or family members of teenagers, there are youth accounts out there now, right? So these are things that maybe have not always existed. I think historically it came in the flavor of a joint account, but we've got some examples here where we have youth accounts, right? Teenagers ages 13 to 17 can open an account. There is parental and guardian oversight, and they can really start to learn to save, and they can invest in that account as well, right? So asking maybe that teenager, hey, what are some companies, if you had to buy a stock, right, what are some companies that you're familiar with that maybe you and your friends are interested in products that they might sell, and you can get a really early introduction even to the investing side of things in these youth accounts. And same as sort of parents and guardians reading up on ideas, a lot of these youth accounts also come with tailored publications for that teenage population, right, which might kick an email to their smartphone on something that's really relevant to them and geared towards that age group. So there's lots of great resources out there, and to your initial point, Sherry, I think it's just so important to get started as early as possible.
Mm-hmm. Absolutely agree. So Marina, thank you for sharing your experience as a younger person, first getting introduced and how it impacted your life. Darleen, as we think about our relationship with money for each of us, what advice would you give to your younger self when first starting out and establishing that relationship with themselves and money?
That's a good question, Sherry, and I can appreciate everything that Marina mentioned, and I kind of wish that you could have been in my ear many years ago as a young adult, whether it had been in high school or early years of college. I think that if I could talk to my younger self, I would say set some financial goals. Like, what are some of the things that you want to accomplish later in life? Understanding a little bit more about money and credit. Not taking advantage of all the credit card, promotions that they offered on the college campuses way back in the day. I don't think they do that anymore. But one of the things that really stands out in my head is I had a friend when I was in high school, a neighborhood friend, and her name is Carol, and I'll mention her name just in case she happens to listen. I want her to know how much of an impact that she had on me. But she told me when I was working a part-time job in high school, every paycheck, take $10 and set it aside. And no matter what you do with the rest of it, just take $10 and watch it, build up. And, as a kid, you're thinking, well, I don't want to do that. I want to spend my money how I want to spend it. I don't want to, we're not thinking of the importance of savings. But I really wish that I could turn the clock back and take heed to her advice. As I got older, of course, I learned the importance of saving and setting financial goals. And of course, we want to buy a house and reach other types of milestones. And in order to do that, savings is key. But I think that had I, just paid a little closer attention to her advice, it would have made me a little bit more mindful of the importance of money, and as well as savings. And as I mentioned, understanding credit a little bit more in terms of not taking advantage of those credit card solicitations. And so, I've prevailed, but, if I could go back in time, this is what I would be telling myself.
That's so great. And I'm sure Carol went off to become very successful with her strategy. Well, not that any of us age, of course, but in all seriousness, when we think about, building plans for the long term, and building your financial goals and objectives, the whole entire aging process and the responsibility for us planning for that aspect of our lives. Lori, would you mind sharing your thoughts about how you advise women to plan for the inevitable aging process from a standpoint of wills and powers of attorney? So let me turn it over to you for your thoughts.
Sure. I think all of those things are important, but I think that they all also point to surrounding yourselves with the right professionals. I think it's important to get the proper advice legally, financially, from an accounting standpoint, from a tax standpoint, and from an insurance standpoint. I know we mentioned that before, but it's all part of building wealth and building a relationship with money, quite honestly. And I think that with all of the things that we've talked about, Darleen, your points are so well taken, but a lot of that is education, right? And I think that education builds confidence and a good relationship with money, right? If you're knowledgeable about it and you know those things that you have to plan for, including the aging process, including different health issues that may come up along the way, including planning for your family's future, even in terms of having the appropriate trusts, wills, estate planning, tax planning, taking advantage of credit shelter trusts and things that are built into the system that could help for your financial present and future, and for your family's future, if that's a priority. So I think learning about all those things, surrounding yourselves with the people that can help you to learn and feel confident in your decisions. And I think a lot of the confidence comes from at least being exposed to different things, right? Rather than just finding out about something, that thing you're afraid of, popping up, the unknown, if you will. The more educated that you are, and the more that you have confidence in the people that you've surrounded yourself with for your financial future, whether it's an investment broker, an insurance broker, an accountant, a lawyer, whomever it is, a confidant, a mentor. Carol could have helped out and did to help to educate you, right? So all those things are important, and I think that that's really the best way to feel confident in your decisions, confident in how you're going to move forward, and confident in the people that you have around you.
First of all, you did a wonderful summary. My question to Darleen and Marina was to say, who can you turn to for advice? But Lori, I think you covered the gamut of everyone that you should consider when you make that whole list of who you want to consider for advice and get guidance, and really make it an effort to become educated. Marina and Darleen, were there any additional folks who could provide advice who were not on Lori's list? Because it seemed pretty comprehensive. Or any thoughts that come to mind?
I do think that Lori was very extensive. I agree with everything that she said, and the individuals, the professionals that you can tap on the shoulder for advice. I also think you could go to your local banker. I think that if you have a relationship with your local bank, they can become your trusted advisor. And so If they're not able to provide the information that you're seeking, they can refer you to a reputable attorney or reputable CPA or even a financial advisor. So, you know, banks are not just there to accept deposits and you know, process loans. They're also there to give advice and help our clients meet their financial needs. So I think I would just add the local banker to that list that Lori mentioned.
Well, I can tell you that our conversation, first of all, I can't believe an hour has flown by because the conversation was so enriched with such great insights and advice. I'm sure the folks who were listening today really got a lot out of this. As I mentioned earlier at the beginning, the contact information for this wonderful and talented panel is available through the events guide. So if you want to follow up and ask more questions, please feel free to do so. This has been a tremendous panel and just a really wonderful learning opportunity and just a great opportunity to chat with everyone. So, so thank you, and let's keep the conversation going. We encourage you to go to #NewJerseyWomen on Twitter. You're going to see a lot of questions coming up, and you'll get access to our panel of experts to ask them more additional questions that you might have. Darleen, Marina, and Lori, thank you so much for making this such a wonderful presentation and panel on women and building your relationship with your money. So thank you. And thanks for everyone joining us today. Bye-bye.